Whatever company you're building, you have to understand your customer. You have to understand intimately understand what they need and what they're trying to get. My biggest fears came true, which was you put a melee of people into basically a mosh pit and just say, go get stuff done. No one has direction. No one has a target. No one has motivation. There's no reference to who's the better engineer, who's the worst engineer, who's taking care of what. It all tries to self-organize. And the idea is, oh, it's a utopian world. They're going to figure it out. But the reality is they don't. So whatever it was that was seeding the business and creating the magic begins to fade because you got just disappointed, unhappy people and you're not able to really deliver culture. And secondly, because there was no structure, the people who were true performers felt that they couldn't deliver. And because that makes them unhappy, they leave. And you're left with the people who are lower performers who aren't necessarily as good at delivering, so they're not as affected by lack of delivery. Being an entrepreneur and always having these like big, hairy, audacious goals in my life, I wasn't comfortable with the idea of, oh, I'm just going to go do the normal thing or approach it the normal way. If we really want to participate in the next generation of business technology businesses, we have to accommodate the way in which they're built, the way in which value is required.
Welcome to Success Story. I'm your host, Scott Clary. The Success Story podcast is brought to you by the HubSpot Podcast Network. HubSpot does a ton for entrepreneurs and business owners. That is why I'm so proud to partner with them for over 3 years now. If you need anything to build your business, help desk software, payment software, email marketing tools, CMS and blogging tools, SEO tools, deal management tracking, pipeline tracking. You don't need more tools to get more out of your business. You just need HubSpot. Their all-in-one customer platform is a dream come true for every member of your team, with best-in-class campaigns and workflows to generate more leads from marketing, category-leading pipeline management to help with sales, help them close more deals, powerful AI chatbots, and a knowledge base to help your service team scale, and it is built to deliver results, to drive revenue faster, and to help you grow your business. So dump the disconnected tools and the chaos that comes with them. Discover what HubSpot's all-in-one platform can do to streamline your business. Visit HubSpot.com to grow better today.
So, the origin story is I actually grew up in England. I went to school there, studied engineering at Imperial College in London, and really, I'm going to age myself now, but in the mid-90s, moved post-college into Los Angeles and started really kind of trying to discover my career. And I started off just, working for a larger engineering firm, relatively larger, not that large, but kind of just doing business development and stuff like that in my early 20s. And it's actually when I was 24 that I first realized that, I was destined to go do something myself, and I wasn't really necessarily excited about just following other people's orders and stuff. And, just as kind of young, arrogant, I guess, young entrepreneurs who think they can conquer the world do. And so I started my career, my entrepreneurial career back in 97, launching a business, which was a camera networking business, kind of a la Nest or Ring these days, but back in a time when you had dial-up modems and we were just about to get DSL up and running. And so did pretty well considering I actually had no idea what I was doing. And so spent the next 3-4 years making it up as I go. I took the CEO role, I had 3 co-founders. And ultimately in 2020, like in the whole, for anybody who kind of can admit they were around at that point in time, the whole bubble burst. And obviously I was right in the middle of it, right in California, institutionally funded, and just in this place where, it's not about making money, it's just about getting growth. So it's just spend. And so it put me in a very precarious situation. I had a round that we'd raised fell apart because of the bubble bursting, but then luckily I had, 2 or 3 suitors that were looking to acquire us at the time. So I was able to engage with them and ultimately got the company sold. Stayed for another year, left, and a year later and went to do my MBA in Columbia in New York, and that's what moved me to the East Coast, which is where I've been for the rest of my career. And the funny component of that is, going to do an MBA, I'm now late 20s, 28 or something, and I go and I start doing all these basic classes around, accounting and statistics and marketing and all these things. And every class I went to was like an aha moment of what people were talking about for the past 3 years. I literally had no idea. I don't know how
way easier. If you
way easier. I was like, that now it makes sense to me. I want to go back and do it all again. And so taking that newfound knowledge, after that, in the 2000s, I set up a fintech company, that was international, was based on Chinese manufacturing and CPG buyers from Europe and the US. Pretty cool, kind of innovative structure. Did a lot of things for the first time, like electronic signatures. We used a bill of sale model for the guarantees. We underwrote that and marketed that paper into the banking world to kind of syndicate out our capital requirements. Like a lot of pretty innovative things that weren't really done that much in those days that have become more commonplace now, and built a pretty good company. We grew to about 140 million in revenue. Sold that in early 2010. Went through another financial crisis with that one, which wasn't fun, but I guess that was just at that point in my life, I felt like it was just destined. And then after that, a couple of years later, joined DigitalOcean right at the onset of DigitalOcean, just as they launched their first product. Joined a COO, stuck around there for almost 6 years. Was able to build the company with a great group of co-founders up to about 250 million run rate, 500 plus people by the time I left, and then now obviously closer to 500 million run rate, public company, doing very, very well, which is nice since I'm a shareholder, I guess, at this point.
It is very nice. Good for you.
Yeah. And then I jumped over to venture like 2 or 3 years ago. We were at the point where we were kind of finalizing IPO readiness. We had a new CEO to come in and take over for the public offering. And then I, was given the option to kind of extend for 4 years or to, make a decision to leave. And I was fully kind of vested and the like. So I made the decision to leave, knowing that I had this opportunity to go into venture. So now I'm investing in founders. That's honestly my passion. I've always loved it. I've always loved working with founders. I love, rather than being so like laser focused on a single thing, I'm now in a place where I'm able to kind of see the horizon of opportunities and innovation and just really just spend great time, working hand in hand with founders that are just honestly very inspirational. That's like, I don't know how many minutes, but 2-minute brief of my life, I guess.
It's very good. No, it's incredible. I guess I want to understand your mindset when your second organization that you started exited. Why at that point did you not go into venture? Why did you go back as an operator into a company?
Yeah, it's interesting. So we did that, and I started making some early bets. I made some personal investments rather, like pre-seed, small checks, and sat on a couple of boards, mentored a couple of founders. I started kind of experiencing that, but doing it on my own back. I think that business, although we exited in a very tough financial climate. It wasn't as welcoming as the climate was in 2018 as it relates to expanding venture firms and so much money going into venture. That didn't really exist back then. I could have pursued a path into venture at that point, but I think a couple of things stopped me. One, obviously, I would have been starting at a very different position and would have had to really build myself up in venture. Which was not my core skill set at the time. And secondly, I still felt like I had more to prove. It was a good company. We did well. We exited, but, it wasn't a public name. The things that I achieved in DigitalOcean was kind of validation that I felt like I still had more to do. And I was also young and full of energy compared to now.
Now we were talking about kids. We're talking about life changes. So.
Yeah, so I was like in a state of mind where I kind of wanted to go work 12 hours a day, 7 days a week and kind of make something happen. Where I am now, I feel honestly like it's a different stage of my life. Everyone thinks that an investor just goes play golf all day. Well, that's not true. I'm still working all day. I'm probably working way harder than I should, but it's a very different position. You don't have that kind of concentrated set of stresses that you deal with when you are you have the world on your shoulders and everybody's money, betting on you and have a little bit more reprieve in that regard, but still get to enjoy, the successes vicariously through the founders that we work with. So this is the right time.
That makes sense. But I still think that there's lessons to be learned from when you chose to join DigitalOcean, because I would assume that after 2 successful exits, you would have had a very good idea. You said you wanted to prove something. You wanted to prove out that you were still could be that effective. So you also probably had a very good understanding of what type of company you want to join. And I'm going to tie this to the characteristics of a company that you want to invest in? Because I'm assuming those things they're not that different. So let's talk about DigitalOcean. What was the type of company that you were joining? Why did you bet your career and a period of your life on DigitalOcean? What were you looking for?
Yeah. So what is interesting is I'm often asked, like, what's the best investment you've ever made? And I always say, to be honest with you, DigitalOcean. Whether it's just buying my options, which cost, millions of dollars at the end of the day, or whether it's, whether it's actually just the time commitment and the resources I committed to it, it was definitely, I love that you framed it that way, because it definitely was a big investment decision to do it. So I had a lot of things coming at me back in that time frame, and I was working with a lot of different companies and a lot of different founders and helping them in different ways. The nice thing that happened to me with DigitalOcean was that I had a good amount. I had like 2-3 months of exposure before I really had to make a commitment. I actually got in there and worked with them and actually kind of felt how the engine worked. The things that I saw was, one, they had captured the imagination of their customer base. They had a very clear and targeted audience. They knew exactly who they're marketing to. They knew exactly the profiles, the profiles of their audience were the profiles of their founders. They understood their customer intimately. And so when you reflect that on how do we make investments, whatever company you're building, you have to understand your customer. And you have to understand intimately understand what they need and what they're trying to get. So that existed. And as a result of that, they really had captured the imagination. So when you started looking at the social proof, whether it's through Twitter or whatever other means of, the validation that this was a loved business, they were building a brand that was truly loved. It was very, very easy to validate that. And then more importantly, you could kind of immediately see the machine beginning to take effect. And when I say that, I mean, this was honestly something that the co-founders and I are so proud of, is that even after all of us left the company, we could see the machine continuing to grow and build the business. But, we built an engine that was, building upon itself. It would bring someone in, capture them, and then build with them and expand with them over time. And then the referral and the organic nature of how that grew amongst an audience was really, really impressive. And you could kind of see it, the seedlings of it in the early days. What I did when I first helped them in that kind of first 2-3 months where I was kind of helping them get their feet under themselves, I really rebuilt kind of the whole structure, financial structure, organizational structure, and kind of the forecasts and projections of the whole business. And my model was telling me they were going to do 100 million in 3 years. And so I'd only built a business that, after a few years did just over $100 million. And I felt like, I need to sell this, the capital markets aren't there for me. And, we're going to cap out. This was a business where I saw it shooting through 100 and going well beyond. So immediately for me, I was like, this is going to be bigger than what I've done before. There's an opportunity for this to become $1 billion revenue business. And I could kind of see the path to get that. So if I believed in the model I was building, then I'd be an idiot not to consider, taking the role. So it's a little different we don't get that much exposure. Honestly, sometimes investment decisions are unfortunately a little rushed because the market is just so aggressive that you have to make bigger bets and decisions without having the same level of information. But some of the fundamentals, like, does the business model make sense? Does it make sense at scale? So even if you're losing money now, what does it look like when you grow? Is that just going to expand and you're going to basically just dig a deeper and deeper hole for yourself? Or are you in a position where scale fixes that? What is the realistic scalability? Like, is this organically going to scale, or is this something you have to fight tooth and nail every day to add a customer? How is the relationship with the customer? Do the customers love you? Is there a true, relationship? Do you really understand that customer journey? So a lot of these like traits that I was recognizing in DigitalOcean are the things I'm ultimately looking for in businesses that we invest in.
So you mentioned a few things there. So you mentioned, like, is it scalable, and you forecasted out and the economics made sense, obviously, and you were working with these people for 2 months. So you knew the people you were working with as well. But one thing is interesting. So you modeled it out, and I'm assuming like regular forecasts, you figure out TAM, and you do all the things you'd figure out for a regular model. But how do you scale at that? What's the playbook to scale at that at that velocity when you've never done it yourself before? How do you forecast out a model? Because this is still early days. Like now DigitalOcean competes with like AWS and it's like now it competes at that level. But when you're building out a competitor to AWS, I don't know how you would model out a similar growth trajectory when there's nothing else out there that has really achieved that scale before.
Yeah. Depends on the stage of the business. So again, we do two different types of investment. We'll invest in our core deals that actually have validation, which means they have data, they have history. And in those situations, which is probably, we were in the earlier stages of that at DigitalOcean when I started working, but I could see it in real time. Like I could see patterns being created. Do you recognize the patterns? Where are you sourcing your customers from? How much of it is organic? How can you drive those, organic channels? And ultimately, all the model is a set of assumptions, a set of growth assumptions. So if you just have an understanding of, every customer I bring in, for every one customer I bring in, I'm going to get 0.1 referral or whatever that number is. For every customer that comes in, this is the average price they're going to start spending. This is the growth rate of that spend over time based upon what I've seen and what I've experienced. And you start kind of just putting those little pieces together. In some companies where they have, market growth strategies and they're like market by market, you look at what's the trend of a market launch and then how can you layer new markets on top to see how that grows over time. So there's just different mechanisms. You just got to be creative from a perspective of how you imagine the business is going to grow and translate that into a set of assumptions that drive the numbers. And then you just roll the numbers out. And so it's ironic, you could get one assumption wrong and your numbers will be way off. Ironically, with DigitalOcean, for the first 3 years of business, we hit our number literally within 1 or 2%. I don't know how it happened. Wasn't so easy.
Very impressive.
Fix, but years 1 through 3, it was so spot on. It was incredible. And so it's just, I guess I was lucky that in that business specifically, those assumptions were really obvious, were really clear, for me at least. And so documenting those and building a model against them turned out to be very, very real. It's always difficult in new businesses where you've never done it before, but it's an art as much as it is a skill. Like you have to actually build the ability to kind of predict what's going to happen, how customers are going to react, and what those assumptions are that are going to drive your business. But I will say from an investment standpoint, when I look at somebody's model, I'm more focused on how they're thinking than what the model's telling me, because I understand that a model could be way off and they could be completely wrong. But if you actually look at the numbers and look at the assumptions and you say, okay, so this is how you see your business. You think these are the key drivers. You think these are the things going to affect your business. It allows me to understand the entrepreneur better. And for me, the question is this person thinking about the business correctly? Like, do they have the right head on their shoulders to think correctly, iterate and adjust those assumptions as needed, build a real kind of business and got to feed into the true assumptions that are going to really drive that business.
So walk me through like some of the, because I want to understand some of the things that M13 is working on now with organizations, but walk me through some of like, pick a few key lessons as you grew DigitalOcean, because that was the largest organization that you were an operator in. So the key lessons that now you bring over to some of the portfolio companies in terms of growth, scaling. We already spoke about how to project, that's fine. But as you actually deploy the strategy, what are some of those lessons?
Yeah, so many.
I know there's a lot. That's why.
How much time do we have? If I try and encapsulate it into some key things, I think the first thing I really learned was growth is not all about just growing revenue. It's about so much of it, and being in a CLO role was key for me. How do you actually manage the growth of the organization to support it? And there's plenty of examples of companies that just outgrew their ability to actually execute. And so definitely in an organization like DigitalOcean, which was highly complex, we had to think about infrastructure, DevOps, data, support, talent, organizational structure, culture, all these different components that all have individually the ability to implode a business if they're not executed correctly. And so probably the biggest piece that has the most immediate effect when you really start seeing that growth. One thing that we talked about a lot back in those days was a quote that I think came from Mark Andreessen, which was that software is eating the world. And also this whole concept that software eating the world was the driver for why people needed cloud. And then the concept that when you have product market fit, then it's, you're not trying to find growth, you're trying to keep up with it. You're just basically running as fast as you can to keep up with the growth because you have product market fit. And that's what we had. And so what do? You have to build quicker, you have to hire quicker, you have to do, a lot of things to build an organization that can support it. We, in the space of the second year I was there, so I joined in 2013, early 2013, in 2014, we added 100 people to the organization, 80% of which were engineers, just in a completely flat, disorganized way. I will say that it was not my choice to do it that way. We had lots of battles about how to do it, but the ultimate, understanding was we need as much resource as we can, and different powers that be were kind of driving to say, let's just hire. We just need people at the table. And my biggest fears came true, which was you put a melee of people into basically a mosh pit and just say, go get stuff done. No one has direction. No one has a target. No one has motivation. There's no reference to who's the better engineer, who's the worst engineer, who's taking care of what. It all tries to self-organize. And the idea is, it's a utopian world. They're going to figure it out. But the reality is they don't. And there's two things that happen. One, because now you're in a situation where you have so many people that you cannot create a human connection with every one of them, culture gets lost. So whatever it was that was seeding the business and creating the magic begins to fade because you got just disappointed, unhappy people, and you're not able to really deliver culture. And what culture is designed to do is to optimize the performance of the team. And secondly, because there was no structure, the people who were true performers felt that they couldn't deliver. And because that makes them unhappy, they leave. And you're left with the people who are lower performers who aren't necessarily as good at delivering, so they're not as affected by lack of delivery. So it became really we got into this, what we would call a cultural crisis by the end of 2014. And we had an intervention of sorts in the very beginning of 2015 and said, this needs to all change. And so at that point, we totally restructured the organization, built layering and organization around the engineering teams, built management structures in there, brought in Matt Hoffman, who still works with me now at M13, to run talent and start building a culture program. And literally a year later, I think we were voted best place to work in New York, or one of those ratings. So we went from cultural, abyss to best place to work. And it was all very, very structured and planned. And, we totally changed our communication strategy. We created bi-weekly, what we called AMAs, which were Ask Me Anything, which the idea of it was, put the executives in front of the whole company and just answer whatever question they have, no matter how hard it is. And just being vulnerable and opening up just creates that bond, even though you've got a bigger organization. And so what I learned was that, the growing pains are the things that can kill, or at least at minimum hold back your company. And so think about your head of talent hire early. Think about them as someone that's going to optimize the performance of your team, not just hire people or not just give people things that they like. It's how do I optimize for us? How do I hire the best people, onboard them as good as possible, and keep them so engaged and tied into the culture and the mission of the business that they are delivering at 110% every day. And that's the ultimate, talent leader. And most young entrepreneurs were like, we're 30, 40 people. We don't need a talent leader now. We can grow double, triple before we need one. Or maybe we just hire a recruiter. We don't need a talent person. But ultimately, everybody that we've invested in that's hired a talent leader has come back 3-6 months later and said, that's the best hire we could have ever made, because it just increased its performance. And there's a handful of other roles and other structural things, like technical program managers is another thing that most people don't realize that they need. But I learned about all the little nuances in an organization that make an organization perform better. And I think that's probably the single greatest lesson that I learned in that whole experience.
I've never heard that before. And I think that's it's industry and category agnostic. So that's a very interesting point. I guess just to double down on that quickly, and then we can move over to M13 and what you're working on and why you even started M13. But that's great. I understand the rationale and the logic behind it. For a first-time founder or even a serial founder, how do you hire that individual? Because I think a founder is either like an engineer or product-focused individual or a sales and marketing background. But I've worked at startups, and I don't know a lot of founders that come from HR leadership. So how do you even find that right person who can optimize?
I mean, the beauty is you don't have HR with talent to be able to figure out that role. I think it's a hard role to hire for, but it's a very personal hire. You know, you're talking about the person that's going to carry your culture and your brand into the organization. It's going to represent, you know, if Karl is starting a company or Scott is starting a company, it's going to be 1,000 people, but how's everybody going to still be that kind of representing that brand or that representation that Scott wants to represent? Who's the person that can deliver that message? And I think it's a very personal connection and role where you really feel like the reflection of what you want to see in your company coming through this one person. You know, the tactical way of hiring this person is just the usual routes, whether it's a LinkedIn post or whether you're getting a recruiter or through network or connections. Like, you'll see people, you'll create a pipeline, but the way you select the person is just really trying to make sure that, first of all, they can represent you effectively. And secondly, they have like the EQ and the emotional intelligence to, you know, carry and build energy in the organization, you know. And then behind the scenes, all of the organizational and kind of capabilities, program management capabilities of actually organizing a team of 100, 200, 300 people. I mean, obviously that team's going to grow, talent team's going to grow as your organization grows. But yeah, it's a very personal hire. I think it's difficult. If I was working with you hand in hand and I got to know you, then I could probably help you figure out what that person looks like. But I think it's different for every founder.
Very good. No, it's great advice, just something to be cognizant of as you're growing your business. Because I've never heard that advice before, but it makes really good sense. Okay, let's pivot into M13, because I know we can probably go into, like you said, there's a lot of stuff that you learned from DigitalOcean, but
there could be a part 2 and a part 3. We'll figure that out.
We can do that. Listen, I just found out you're in Miami. I'll do like
you can just hang out every day and talk. Yeah.
I'd love it, man. I'd love it. All right. Okay, M13. So what was the concept? So yeah, you made some money. That's great. And you want to invest in companies also. That makes sense. But there's a lot of incubators. There's a lot of private equity firms, PE firms, VCs. So what's the difference with M13? What are you bringing to the table that Y Combinator wouldn't?
Yeah. So you've mixed in a lot of different types of stuff.
That's true. I was really unfair. That was really unfair. Sorry.
Other radar, PE is on the whole other end of the scale. Venture sits in the middle somewhere. Then there's these studios that that incubate from the ground up. So there's the different types of models. We are truly an investor. We're a venture firm, early stage investor. Really I connected with the two founders. So I came in for Fund 2. Fund 1 was much more of a family office type fund. It wasn't as much of an institutional fund, but there were lots of incredible investments made out of that. I think they seeded 7 or 8 unicorns out of that fund. So just really, really incredible performance. And that's what allowed us to build Fund 2 and beyond. But in the beginning, I left DigitalOcean at the end of 2018, but at the beginning of 2018, I kind of took on an advisory role with Karl Online, my partners at M13, to help them devise if we really wanted to make a mark in venture, if we really wanted to progress venture where it needed to go and really help founders be successful, what is it that we need to do? How do we need to structure this to make a mark? Being an entrepreneur and always having these big, hairy, audacious goals in my life, I wasn't comfortable with the idea of, I'm just going to go, do the normal thing or approach it the normal way. Most first-time funds are going to be either pre-seed 20 million, or maybe they'll do a 60 or $80 million fund. They'll be very traditional, very tiny, thin team, and they'll focus purely on let's just go use our relationships to find the best investments, prove ourselves, and over time, perhaps build to the next level of investment. We really came in strong. Karl Online and I all agreed that we needed enough capital to really allow us to build an operation that was going to differentiate us. So we built our first fund around $190 million, or fund two rather. Fund three now that we're in is $400 million. So we've doubled since then, but $190-ish million. And with that, we also, what we did is we started to think about, in my experience and in their experience, and in all our friends who are founders' experience, what is the thing that everybody was felt like lacking in their relationship with investors? However great the investor is, there's definitely investors out there that are backseat investors, but there's also investors out there that'll sit in the driving seat with you. But the key thing that was consistently missing was that you never had a true partnership in an investor. It was usually very, however helpful they were, it was kind of always at a distance. It was always kind of like a, more of a guidance or a directional and a very reactive sensibility towards how investors help you. Like, you get into a problem, okay, then they might help, rather than being proactive. So what we said is, you know what, we really need a firm that's built more like an operating firm, where we have the skill sets and the capabilities to really go in and become like this extended team, or this bench that, that your founder team can lean on and pull in as needed to get key things done, make decisions better. I've spent that cultural crisis I talked about. We spent a year spinning our wheels, minimal advancement of the company, trying to deal with that. If I had the right partners with me at the beginning, they would have said to us, you are about to go into a cultural crisis. You need to build structure. And we would have fixed it right up front, and we would have bought ourselves a year of growth. And so how do we do that for other founders, whereby they don't have to face all of the challenges and all the problems we face, because they're basically being given the guidance and the support and the strategic direction needed to solve that. And it's not just in one function, it's in multiple functions that all relate to growth. So there's the pieces that drive growth, whether it's brand, product, performance marketing, things like that, or the pieces that support growth, which is like your data or your finance, your operations, the things that you need to manage growth rather. And so what we did is on top of the fund, we actually invested, an additional amount of money, 3 years worth of operational money, to build a team of these executives. I brought in Matt Hoffman and Rob Olson from DigitalOcean with me. They were the two best people that worked for me at DigitalOcean. One ran talent, one built the whole data organization there. We brought in, Christine Choi, who had been running brand and comms for Richard Branson at Virgin for 12 years. We brought in, Lizzie Francis, who was CMO at Guild Group, COO at Goat Group. So just this caliber of people that was just so beyond anything an early stage company could get. And we framed it to be the ideal kind of executive team of a growth company. And all of them had been in the very early stage, mid stage, and even through the public company stage. They'd all been through that whole experience. And we decided we wanted to build a true partnership with our founders. Our thesis was not to be capitalistic, but rather to say, if we can focus on just making our founders as successful as they can be, partnering with them and helping them become as successful as possible, the economics will follow. The economics will take care of themselves. And so that team has oriented over the last 3 years to build a set of programs and an approach where we truly, truly partner with our founders and truly help them along their path and do as much as we can to really help them become as successful as possible. And the results of that, I think our NPS with our founders is somewhere like 88, which is obviously incredibly high. I think if you asked most of our founders whether we were the largest investor or not, like in terms of value, most of them would tell you that we're the most valuable investor they had. And we just built such great bonds and relationships with our founders, and not just because we're nice people, but because we truly have been there with them through the tough times and the good times, and help them make better day-to-day decisions along their journey to ultimately result in kind of better outcomes. And so that's how we differentiate. And what's interesting is you hear, oh, every VC is going to say the same thing and stuff, but I don't think any other VC has taken their own economics, put it on the table purely for operational reasons, to basically over-deliver at these early stages of investment. Most other firms really are just much more heavily focused on investing. And the ones that have built platforms more recently have done so, but again, it's not as hands-on. It hasn't taken as much external investment as what we've committed to to kind of create this differentiated experience.
Success Story is part of the HubSpot podcast network. In the network, there are other incredible podcasts like The Ops Authority, hosted by Natalie Gingrich. Every week on The Ops Authority, Natalie discovers actionable strategies to move your business forward and transformational stories of powerhouse business owners who value operations. You can't ignore back-end pieces that have to work together and flow smoothly in order to build a brand, grow a movement, or disrupt an industry. If the operations side of your business is a mess, putting out fires will always take priority, leaving no room for creative innovation, visibility, or networking with powerhouse peers or even wannabe powerhouse peers. You got to get your house in order. And to do that, you have to listen to The Ops Authority wherever you get your podcast.
I completely respect that, and I think it's incredibly valuable. And that's why I didn't want to just label you as an investor, because I think that somebody who invests so heavily in operations, and even the fact that I didn't know that you invested so much of your budget in building this executive team out, but even the fact that you are an operator and you are moving into this, it's not like you're just a bunch of, not say just a bunch of, but a bunch of people that have access to capital who want to deploy it. Like, you've actually been an operator. I find that that's always the best kind of investors, because the worst thing you can have is an investor that doesn't have any experience being in the trenches and trying to understand what a founder's dealing with, and they've just never done it themselves. So I think there's merit to that. So you call yourself just an investor, but at the end of the day, what does a founder need? Whether or not it's with an incubator or with PE or VC or investment, it's help. It's help, because you don't know what you don't know.
Yeah, I think we think of venture as a service, as kind of the next generation of venture. It's not just.
I was going to ask, is this like what everybody's moving to? Like, is it almost like it's necessary to have that operational experience in venture now? Is that starting to be the de facto or the norm?
We feel like it. I mean, we've invested in that, right? I think we were very early, if not the first, to kind of truly throw ourselves in the ring, like wholeheartedly in that. You can say the Andreessens of the world started it, 15 years ago when they started building platforms, but I think we've taken it to another level, hopefully, even beyond that. But what I would say is now when, money has become a commodity, we find that the best opportunities and the best deals are looking for partnership. They're looking for that support mechanism. And they know they can get the money from pretty much anyone they want it from. And it's more of a question of, what's the relationship we're going to have? How are we going to, we're going to be 10-year partners in this. Is this the right partnership to make? And so we found ourselves being invited into great deals. We found not only from founders, but also from, other venture firms that have found, have enjoyed working with us and seen the value we provide. And so it's just made it easier and easier over the past 3 years to just build a better and better portfolio as we get more and more access to kind of really exciting opportunities that are out there.
I'd be curious to know, like, what some stories from some of the portfolio companies. So what are some of the companies that you've worked with, and what are some of the things that they've had to overcome as they've grown? So, like, let's talk about some success stories in your portfolio.
Yeah, I mean, it's probably the companies that are kind of at the pinnacle of success. Capsule is probably the biggest company that's in our existing portfolio. And I'm not including Fund 1. Fund 1 has a bunch of unicorns, but again, that was pre-model. But from Fund 2 mainly, Capsule is a digital pharmacy based out of New York. It's now in multiple markets. They were, obviously at a later stage for where we usually invest. But again, just kind of helping them think about their market launches and stuff. I think we probably had more of an effect on the layer that sits right under them. So companies like Chef, which is the home cook kind of Grubhub solution. We helped them navigate. They started in San Francisco. We helped them get into New York. Then they launched Los Angeles, and they've begun to kind of build out the different components of the market. They built a really incredible relationship with Christine, our brand and comms person, who really helped them shape a lot of their messaging, a lot of how they've gone to market. So they've had kind of the most, highest level support from a true comms, skill set to kind of build a message that has really resonated in market. And, they just did around, I think a few months ago, at around a $500 million valuation. So that we came in at, I think, $11 million valuation is where we started with them. So, we've really seen them rise through that. Well, a company called Road Banking. It's an SMB banking solution. Great founders, Alex and Everett. And they were building, they are building, again, they did a round at about a $500 million valuation too. They are building a kind of the most integrated banking solution, integrates with all of SMB's financial systems, whether it's QuickBooks or NetSuite, and kind of integrates all the services into one platform to make it really easy. And again, similar thing, when we joined them, when we started working with them, they were really kind of nascent in their development of the product, of the market. They had a small team. We helped them kind of organize and structure how they wanted to build their team. They're a great example of kind of getting them to focus on that talent hire. They're one of the Everett's told me, the CEO's told me a bunch of times that that's possibly one of the best hires he could have made. Like, he totally sees the value of it. And so just really guiding them through how to think about building the organization has been really, really helpful. It's a company called Lightning Labs. Anybody that's in the Web3 or crypto world would know them. Lightning is the second layer platform. It's an open source platform that sits on Bitcoin and allows for transactions, real-time, inexpensive transactions on Bitcoin. And Lightning Labs, has built all the kind of the infrastructure to support that. And 90% of the Lightning market is sitting on Lightning Labs, LND nodes, as they're called. With them, the incredibly talented team, but kind of very raw in building their product, put it out there. We help them navigate thinking about data, how data plays a role, help them kind of structure how they want to think about kind of the data stack and how they want to use data to basically make decisions and build that whole component out in their business, which is another key learning I got from DigitalOcean in terms of the power of data and how it influences companies. Since then, I think they've raised most recently at around a $600 million valuation. Again, another company we came in very early on. So there's like a list of these success stories. I think what's really interesting is the next generation that haven't quite gotten there yet, that are just now growing. A couple of really exciting ones. There's one guy from Yale who actually left Yale on a Teal fellowship called Mike Chime, and started a company called Prepared, which is really this massive disruptor of the 911 system. Really built a full multimedia solution around 911, where now dispatchers can handle multiple incoming inputs on a particular event with video, audio, all potentially NLP to kind of reduce to a core set of information that's truly valuable, so that when you get to the first responders vehicle, that information is delivered in an incredibly valuable way, and you don't get situations where you can see just from the news in the last few years where first responders have gotten the wrong understanding of the situation they're going into and mistakes have been made. So this allows for a much smarter first responder strategy across the board. And just we made a small investment in him right at the beginning just because we believed in him so much. And over the past year or two, he's just built out an incredible machine, helped him the whole way along, like figuring out the strategy of, the business, the customers, who are the customers, how are you going to charge them, what's the pricing model, who are the different stakeholders, really mapping out the whole organization. We just worked hand in hand with him the whole way to get to a place where he's really now gotten to a rhythm with his co-founders of building this business. And in the last month or so is just in the midst of an incredibly incredible round of investment he's doing, where just he's being essentially bombarded by incoming interest. There's just so much interest in the market around what he's doing, and that's a real exciting, I think there's an exciting opportunity for him going forward in terms of where that's going to go. But just very, very tightly integrated in terms of helping him get from where he was to where he is now. And I'll finish with one more, which is
okay. Then I have one more. I have a follow-up because you mentioned some successes. I want to speak about some missed opportunities too, because I'm sure you've seen some.
Okay. So this one is I'm digressing towards missed opportunities. So let me first of all talk about one more really interesting story, which is a company that was presumed to have failed because of COVID. So it started as a platform to manage field marketing activities, mainly for the liquor and beverage brands. So you can imagine COVID comes along, everything shuts down, there's no field activity. So they went from a high flying growth trajectory into like nothingness overnight. And we had a situation where even within our own firm, we were debating like, does this company have a future or not? Is there anything there? I was an observer on the board, and Rob was the board member, and we worked very closely with the team to navigate how they managed their COVID period and establishing the predictions of what happens coming out of COVID, and then essentially restructuring their business from what was this field marketing tool to a full remote task force SaaS platform that now facilitates services across multiple different categories of activity. So kind of like a, like I want to say, I don't want to say a Salesforce, but like a ServiceNow type platform, but for remote task management. So like a big SaaS solution for, and since they have made all that transition, rebranded, repositioned everything as this kind of task force SaaS platform, they have reconstituted growth. They've exceeded their pre-COVID numbers pretty significantly. They're accelerating at a pace faster than they ever have. And after a year of everybody thinking this company has no future, now they look like they could potentially be a real high flyer in the market. And we were so heavily involved in the process of helping them navigate, not panic, but navigate from we're in trouble to we're in a position where we've actually used this time to just bolster up the business in an incredible way. And so those are the types of things that we've gone through, from true success stories to suffering companies that we've helped kind of turn into potential success stories.
So to follow up on that, I'm just curious, and you don't have to go through like an entire list, but you can if you want. I just want to be cognizant of time for you. But missed opportunities, but also I'm curious about largest failures, like a large failure and why. What happened in a large failure that you went into, but also a missed opportunity? That's always fun to hear too.
Yeah. Luckily today, we haven't had many large failures.
That's good. Keep it up.
Good. I'll talk about one missed opportunity, which was maybe short-sightedness on our part. So we had an opportunity to invest in Dapper Labs, which launched NBA Top Shot and kind of has become this NFT hub for NFT kind of talent and opportunities. And we had an opportunity to come in and invest in them, but it was a token play. They wanted us to buy tokens. Our fund two was not structured to take alternative assets. We kind of were trying to play it by the book, and it was $1 million investment, and we thought, it just not really doesn't fit. Like we want to invest in the platform. We'll give you money directly, but they weren't selling equity. They wanted to sell tokens. Fast forward 12 months, that $1 million would have been $360 million. So bad economic decision. What we've done since then is realize that, not only is the model of the companies we're investing in, the services, well, not only are those evolving, but the underlying structure of these companies are evolving. Like Web3 is totally changing the concept of investing and structured investing. And so what we've done with Fund 3, we've really structured ourselves to be able to do these more kind of non-standard deal structures like tokens and things like that, where it makes sense. Knowing that if we really want to participate in the next generation of business technology businesses, we have to accommodate the way in which they're built, the way in which value is acquired. And so I think that was a big learning from that. But that's that's an obvious miss where, we could have, paid twice the fund back in 12 months would be a pretty good IRR, but it didn't quite go down that way, unfortunately.
You live and you learn. You live and you learn. I want to do a few rapid fire to close this out, but just to give you, just one last, if you want to speak about where you want M13 to go in the future, some of the companies you would love to look at in the future, as well as, open call to people that want to connect with you. Where should they go? Should they find you on social? Should they email you? What's the website? All of that. So where's the future of M13 going?
So I think, as I said, like our whole ethos is about the relationship with the founder and driving for founder team success. That's the goal, right? So we've been thinking about what does that mean for us and where do we invest and where do we establish those relationships? And I think we're looking at the full life cycle of the founder journey. It starts earlier than where we participate now, and it goes later from where we can be effective. So thinking about allocating a component of our funds towards a pre-seed strategy where we can kind of really go and work from the ground up and identify opportunities and really great talent and support them at the earlier stages. but then also looking at opportunity funds where we can actually be impactful in future rounds and the true life cycle of the private company until it gets to its exit point. So from a structural standpoint, we're thinking about kind of expanding that rather than just purely being focused on seed and A. It kind of gives us the opportunity to play on the full life cycle of the business. In terms of where we want to invest, we've got 4 core categories that we kind of think about, at least for Fund 3. Obviously, it always changes fund to fund, but everything is centered around 2 key themes. One is, the future from the perspective of a consumer. And the second is what are the opportunities of Web 3.0 type integration into these futures? And so the 4 key categories are future of money, which is fintech, but also crypto, also prop tech, things like that. The future of health and wellness, which we think about telemedicine, we think about mental health, we think about, a lot of aspects of how consumers are going to experience health and wellness, longevity, things like that in the future. The future of e-com, which is not, CPG, but it's much more platforms and solutions that are centered around e-com, video integration, social integration, like a lot of the different ways in which consumers, again, are going to experience e-commerce and the tools and systems that support that. And then, so we do health, money, e-com, and the 4th one is, you might need to edit this part out.
No, it's
it's going to come to me in 1 second. But so basically the idea is we have these 4 key categories, and they're all about the consideration of the future of how people think about those categories. So that's where we want to apply our money. That's where we want to invest. That's how we think that technology is going to change consumer behavior over the next decade.
The future of M13, and then where to reach you, and then we can go right into rapid fire.
Yeah, so the future M13 is really, as I said, we focus on really working with founders and kind of being partners to founders. So the idea is we're thinking about extending that life of the founder, because the founder begins their journey well before they come into where we invest today, and they continue well after our investment, our investment kind of period or period of most value. So from a fund standpoint, structural standpoint, we're thinking about, allocating funds towards pre-seed, kind of getting into kind of the earlier germination of the ideas with great founders that we really believe in, and also building opportunity funds to kind of extend out and participate and be part of the journey beyond kind of our core focus that exists right now. But in terms of what we want to invest in, it's pretty simple. Obviously this evolves from fund to fund, but for Fund 3 specifically, the way we've defined it is everything centered around 2 core themes. One is how does a consumer look at the world? And the other one is, are there opportunities for Web3 integration and kind of blockchain type technology integration into some of these different categories? But there are 4 main areas that we focus on. One is the future of work, which is basically everything related to how consumers, the future generations are thinking about work-life balance, remote working, gig working, shift working, just controlling your choices way more than people have done historically, and all the different ways that manifests in how people optimize their lives around work, as well as the tools and the capabilities that are out there that support, SMBs and the like. Future of health, lots of telemedicine, mental wellness, things of that nature. Future of money, which is not just fintech, but also crypto. And then also we think about prop tech in that category as kind of an investment vehicle. And finally, the future of e-com, which is really how do consumers think about shopping in the future? It's not CPG, but it's much more the platforms and the solutions that facilitate, shopping, whether it's video, social, things like that. So that kind of encompasses the full gambit of the areas that we're interested in and what we want to invest in. It's kind of all centered around, the changing consumer behavior over the next 10 years and the technologies that are kind of feeding that.
And then if people want to reach out and they can just chat with you, or they want to, I'm sure you get a lot of pitches, but they want to pitch M13, where do they go?
So M13 website is easy, m13.co. So that's always easy to kind of just look us up. But for me personally, I'd say LinkedIn is probably the best way to find me, Karl Alomar on LinkedIn. I also have Twitter, Calmar NYC, but I tend to be more active on LinkedIn. And then obviously with M13 has a LinkedIn page too. So feel free to reach out to us there and we can connect.
Perfect. Okay, let's do a couple rapid fire. Just pull out some career insights, life insights. Biggest challenge you've overcome in your professional life?
Yeah, I'd say the biggest challenge I overcame in professional life was probably the financial crisis of 2008. So obviously I was in a fintech business and the whole financial world seized up on me. So I was just in a really, really precarious situation. And you can ask my current wife, who was, not my wife at that point, but definitely stood by me and supported me as I kind of went through the daily struggles of dealing with the next, big, pin to drop, I guess, on this whole thing. So the real way, the thing that I really learned from that is my ability to get through that and kind of actually come out of that with a growth business was centered around two things. On a personal side, the support mechanisms I had around with my wife and the people that were supporting me personally, but more importantly, well, not more importantly, but equally as importantly, it was on the business side, the board we'd established, the mentors that I'd established around me. It built a really, really good set of people around me that were just incredibly influential and capable and just very supportive throughout the kind of difficult journey that we had to go through over those 6 months or so until we started to resettle the business. So we really just learned that, it is so much about the people you put around you and the support mechanisms you have around you, because it's in those tough times that those become hugely valuable.
One person, obviously there's been many, but one person who's been highly impactful, influential in your life, who was that and what did they teach you?
Very interesting. There's been kind of an evolution of different people in different times of my life that have been, really, really impactful and really, really helpful to me. I think, when I was building the fintech business, my partner at the time, who actually is someone I went to school with, was obviously had built a pretty big firm. He was running a business that was, at the time that I started working with him, doing about $1 billion in revenue and about $2 billion by the time that I'd finished, totally separate to traditional finance. But really kind of gave me some good insights on, just thinking about growth, thinking about scale, really helped me to kind of navigate the way I was, we were building that firm, and definitely learned a lot from him on that. But I think that in every juncture of my life, all my learnings have come from kind of key people in those moments. I haven't had a single mentor that's spanned through the entirety of my career, but I've kind of always identified key people in each of those key moments that have just been the best guidance point for me in terms of figuring out how to deal and address that part of my career. I've had a pretty eclectic career, so it's interesting to kind of very different industries. So kind of, leaning on different people at different times to really grow in that.
A book, podcast, a source that you recommend people go check out?
Yeah, definitely lots of books out there that are really, really interesting. If I go to a couple of old school ones, Eric Ries's Lean Startup is just that kind of changed the way I thought about business building. But, obviously it's a very common book at this point. And if I look at my shelf, I've got, let's see, Never Split the Difference is a great book about negotiation. It's actually an FBI negotiator who kind of tells all the strategies and things around negotiation. There's a 0 to 1 is a great book. The Hard Thing About Hard Things is a great book about kind of building businesses and going through, lots of struggles. There's some really interesting books out there that definitely kind of give a good story for you to learn from.
Those are all pretty damn good suggestions. So can't fault you if you check those out. Those are good places to start for sure if you haven't read them. If you could tell your 20-year-old self one thing, what would it be?
Figure out what you're doing before you start your first company. Get an education. Doesn't have to.
So you can understand. You can understand what they're saying.
Get an education. No, I think actually the best thing I would do. What I would actually probably do is I'd say, be very critical about the quality of people you hire and learn from them, because I think that's probably the best way to get an education at that age. The MBA was hugely helpful for me, but I think there's a lot I could have learned on the job if I had the right people around me that brought that knowledge to me. So, and I definitely learned later in my career that the quality of people you put around you is really the recipe for success. That's what makes things work. So at the age of 20, I would have said, just make sure you pay attention to the team and make sure you learn from everybody you bring on board. I think that would be the best advice.
Very good advice. And last question, what does success mean to you?
Success is interesting. For me, it's really just about the quality of life that I can live, but more importantly, the quality of life that I can give to my family. And I'm not talking about opulence. I'm talking about, just experience. Comfort as a baseline, but then experiences and the ability to really, choose your own adventure. So all the things that we achieve in life and everything that we gain monetarily, to me, it doesn't, the financial component of it doesn't matter, other than the fact that it gives me the option to experience more, to learn more, to do more, to give that all to my family, and to kind of see that grow. So success is living the life that you would choose if there were no limits to your options. And very few people get to do that, unfortunately, but it's a very, very fulfilling, life to live, for sure.